And that's really interesting you say that. A 60-40 split, 60% stocks, 40% bonds is traditionally the way that this has gone down. And it's easier for people to rationalize, I think, a rising market forever. Technology, better investment, capitalism, you're more efficient, prices rise, blah, blah, blah. But if you try to really think about what makes a bond rise, it's inverse to interest rates. So as interest rates go down, as they have for the last 30 years steadily, the bond market has gone up. You're talking the mother of all bubbles, because how does the bond market continue to go up? Well, rates have to continue to go down. And we're already, A, we're tightening and moving away from that, but B, they're not high enough yet to where the only way if they really continue to go up is if we see a massive drop of interest rates, which that's not going to happen. The Fed loses all credibility at that point. And you think about the pensions and the insurance companies and the retirement accounts that have engaged into a 60-40 stock bond allocation, this will not end pretty. And I really do believe that before this is all said and done, we will see disorderly sell-off. And to presume that the Fed can engineer widespread prosperity forever and a soft landing is foolish and naive. We are at that point right now where these types of best laid intentions need to be reevaluated. And that's why you're getting these phone calls, because I think even the advisors, if they're honest with themselves, would have to say, geez, nothing goes up forever. And the bond market, which has been the greatest rally bull market of all, is, I think it's about as dangerous of a place to be as you could put your money right now, which is, you look at the U.S. and you have currency risk, you have interest rate risk, you have solvency risk. I mean, the U.S. government, which is considered the safest investment of all time, we're insolvent, we're broke completely and totally. They're talking about rates rising and countries starting to shed them and sell them. So the bond market is by no means safe. And I think you have lots of risk that people aren't factoring into it. So yes, for you to be getting those phone calls, we have as well. I think it's completely normal. If I were a financial advisor and, hard assets were something I really didn't put into the equation, I mean, where the heck do you put your money? You put it into cash where it's losing 9% through inflation? Do you put it into the stock market at sky high PEs with that is off to its worst start? And you look at the Russell, it's off to its worst start in years. The NASDAQ, its worst start since its inception in 71. The S&P 500 to its worst start since the Great Depression. I mean, is this the market you want to put your money into, or the bond market, which, this is not a safe place. This is not an easy job right now. So I think for them to acquiesce, good for them. I think they're doing the right thing. And if anyone were truly honest with themselves as to where they wanted to put their money in this environment, if you can find some place that isn't precious metals that you feel safe about, let me know. A lot of people say cryptocurrencies. Look at what the cryptos are doing. Why are the cryptos getting hammered? Because Wall Street took them along for the ride. With all the money that was created, a good bunch of it on Wall Street went into the financialization of the crypto market. You have these huge hedge funds and big funds that are invested in not only cryptocurrencies themselves, but the derivatives, the stocks of like Coinbase and all of these other things in the crypto sphere are very much financialized through Wall Street. So the purity of cryptocurrencies in many respects, which is, the decentralization and the peer-to-peer and all of this stuff, has been polluted by Wall Street. And I'll tell you something, if Wall Street collapses, if you don't think that Bitcoin and other cryptocurrencies are going to get their rear end smacked hard, here again, I think you're making a big, big, big mistake. That's not to say they don't have a future and won't come back. But I think that a lot of people, and look at all the people who invested in Bitcoin through Robinhood I know people my age that have, and I ask, why do you do that? Why do you not take possession of them yourself, hold them in your own possession? Well, it's much easier to do it on Robinhood. So you got all these people who have bought, and like the Grayscale and all of these ways to invest in cryptocurrencies through Wall Street. So I think that it's not the safe haven that a lot of people think it is. When the dollar collapses and the markets collapse, I do believe Wall Street will drag it underwater with it. And I think people need to think about that a little bit. You don't see massive Wall Street participation in the metals market. You do see manipulation by the commercial banks. It's like the one thing they're holding down should be the key to everybody. They're letting everything else go to the moon, sucker you all in, right, before the Great Reset. But the one thing that they just want everyone to think is crap and an archaic relic of the past, the same thing that was reclassified Tier 1, the same thing that the big money is quietly engulfing, the same thing that from a retail basis is you can't keep in stock, is the one thing they're telling us you shouldn't be investing in. Do you see the misdirection in all of this? So people are too blurred and blinded and infatuated with price. I get it. When you buy something as an investment and it goes up, you feel like a genius. But I will tell you, there's something to be said for the fact that everything is going up or has gone up except for metals. Yet that's the thing that the biggest money in the world has been accumulating. I think that you need to take a step back and read The Art of War and think about a little bit of misdirection. And, gold and silver are doing what they're supposed to do. Yes, they're not going up. And in fact, they're going down. But I would argue they're going down a lot less than a lot of the other big markets are and will be. And before it's all said and done, when we cross that Rubicon, when people realize that traditional investments need to be abandoned, where are they going to go? That's when everything changes in the metals market. That is when it will become impossible for the banks to hold back the price any longer. And one of these days, when they keep smashing, maybe they are repositioning. The Commitment of Traders report looks great right now. And you got the commercial banks, the least short they've been in a very, very, very long time. They rinsed and washed. One of these days, maybe they'll just let it go to the moon. Maybe that's why J.P. Morgan amassed 1.1 billion ounces of physical silver and 40 million ounces of gold. Maybe one of these days they stop manipulating it because they realize that the world is awoken, not just the U.S., but the whole world is awoken to inflation, to chaos, and to what's happened with Swift and Trudeau. And they're all thinking, even if they're not saying it, are we next? And I just think all of these things put together make owning metals more important than ever. And this is going to sound really trite, and I'm not trying to be a jerk by saying this, but the price doesn't matter right now. It doesn't. It's the only island of safety right now where you can say, hey, it is inversely correlated to the U.S. stock market and to the chaos that's coming. And if you are thrown off by the manipulation and by the volatility, this will be the one time to really try to strengthen your grip and your resolve and trust your gut. It's never been more important, Dunnigan. Honestly, it truly has never been more important through this volatility especially.